What is trend trading? Trend trading is a trading style that attempts to capture gains through the analysis on an asset's momentum is in a particular direction. When the price is moving in an overall direction, such as up or down, that is called a trend. Trend traders enter into a long position when the security is trending upward. An uptrend is characterized by higher swing lows and higher swing highs. Likewise, trend traders may opt to enter a short position when an asset is trading lower. A downtrend is characterized by lower swing lows and lower swing highs. Welcome to Polly the Trader's channel. I'm Polly and I work as a trader. My goal is to produce numerous captivating videos about trading, covering topics such as how to make money, effective trading techniques, and comprehensive lessons on indicators and patterns. Therefore, I encourage you to subscribe to my channel. Your support will bring me great joy, and it will also prove adventures for you in your trading journey. Trend trading strategies assume that the security will continue to move in the same direction as it is currently trading. Such strategies often consist a take profit or stop loss purpose in order to lock in a profit or avoid big losses if a trend reversal occurs. Trend trading is used by short, intermediate, and long-term traders. Traders use both price action and other technical tools to determine the trend direction and when it may be shifting. Price action traders look at the price movements on a chart. For an uptrend, they want to see the price move above recent highs, and when the price drops, it should stay above prior swing lows. This shows that even though the price is oscillating up and down, the overall trajectory is up. The same concept is applied to downtrends, with the traders watching to see if the price makes overall lower lows and lower highs. When that is no longer happening, the downtrend is a question or over, and the trend trader will no longer be interested in holding a short position. Trend trading strategies. There are many different trend trading strategies, each using a variety of indicators and price action methods. For all strategies, a stop loss should be used to manage risk. For an uptrend, a stop loss is placed below a swing low that occurred prior to the entry, or below another support level. For a downtrend and a short position, a stop loss is often placed just above prior swing high or above another resistance level. Oftentimes, traders use a combination of these strategies when looking for trend trading opportunities. A trader might look for a breakout of a resistance level to indicate a move higher might be started, but only enter into a trend if the price is trading above a specific moving average. Moving averages. These strategies involve entering a long position when a short-term moving average crosses above long-term moving averages, or entering a short position when a short-term moving average crosses below a longer-term moving average. Ultimately, some traders may watch for when the price crosses above a moving average to signal a long position, or when the price crosses below the average to signal a short position. Typically, moving average strategies are combined with some other form of technical analysis to filter out the signals. This may include looking at price action to determine the trend, since moving averages provide very poor signals when no trend is present. The price just whips also back and forth across the moving averages. Moving averages are also used for analysis. When the price is above a moving averages, this helps to indicate that an uptrend may be present. When the price is below the moving averages, it helps to indicate that a downtrend may be present. Momentum indicators. There are many momentum indicators and strategies. In regards to trend trading, our example might include looking for an uptrend and then using the relative strength index RSI to signal entries and exits. For example, a trader may wait for the RSI to drop below 30 and then rise above it. This could signal a long position, assuming the overall uptrend remains intact. The indicator is showing that the price pulled back but is now starting to rise again in alignment with the overall uptrend. The trade could potentially exceed when the RSI rises above 70 or 80 and then falls back below the selected levels. Trend lines and chart patterns. A trend line is a line drawn along swing lows in an uptrend or along swing highs in a downtrend. It shows a possible area where the price may pull back in the future. Some traders also opt to buy during an uptrend when the price pulls back and then bounces higher off on a recent trend line, a strategy of buying the dip. Similarly, some traders select to short during a downtrend when the price rises to the end and falls away from a declining trend line. Trend traders will also watch for chart patterns such as flags or triangles, which indicate the potential continuation of trend. For example, if the price is rising aggressively and then forms a flag or triangle, a trend trader will watch for the price to break out of the pattern to signal a continuation of the uptrend. Let's look at a practical example. We open a trade on the AUD and CAD currency pair, setting the time frame to 4 minutes. Entering the 5-minute downtrend with a $300 investment. While our trade is ongoing, let's analyze the situation. This is a mirror movement, a slight downtrend. Let's draw it completely for a clearer view. What we observe here are the touch points where the drop begins. We are definitely 1, 2, 3, 4, 5, and the decline continues from the peak to the minimum, making the points. The first point, the second point, the third point, the fourth point. At this point, there was a mirror breakdown, but it was for secondary importance as the decline resumed promptly thereafter. Another breakdown occurred here, and at this moment we enter a downtrend. So what do we see here? We notice a trend line from which the graph constantly bounces downwards. We also observe a second trend line from which the graph rebounds upwards. In other words, we can see a trend channel in which the price constantly falls and moves from one level to other, as I explained in the theoretical part. So, all we need to do is wait for such moment, and I encourage you to subscribe to my YouTube channel, of course. And now we await the conclusion of the trade. Only 5 seconds left, and as we can see, our trade is confidently closing with the maximum possible profit. Let's evaluate that what happened. Earlier we drew a movement a few minutes ago, which we predicted, and we observed that this movement is being executed precisely, without any unexpected issues or breakouts. The movement will continue towards this support level. I trust that I presented everything in a clear manner and showed practical examples of how things work. Realize that the information discussed on this channel as it consists of valuable advice. Don't forget to subscribe to my YouTube channel to stay updated of new video releases. Thank you for your attention and farewell.